Welcome back, everyone, for another fireside chat. There's no fire again, but we'll definitely have a chat. Joining me is Geoff Heal, the Professor of Social Enterprise at the Jerome A. Chazen Institute for Global Business at the Columbia Business School in New York. Welcome, Geoff. And to the audience, please weigh in yourself with questions for Geoff. I get to start, though, and Geoff, I want to begin by exploring the energy transition that is almost about to get underway with the support of the federal government in the US with the election of Joe Biden, and specifically your view of this transition, of the president-elect's big plans for decarbonization, your view as a business professor about the cost-benefit analysis that you might bring to this kind of topic. Joe Biden has these huge plans. He wants to decarbonize the American electricity by 2035. He's talked of a $2 trillion plan that would also create jobs and provide this stimulus for the economy after the pandemic passes. $2 trillion seems a lot. From your point of view, is it a lot, or what is the actual cost of, let's start with decarbonizing American electricity?
So the cost of decarbonizing American electricity is, there's a big difference in what I call the gross and the net costs. So the amount of investment required is certainly in the trillions of dollars. You've got to put in a lot of new capital equipment, a lot of wind plants, a lot of solar plants. You'd need to improve the quality of the grid and the sort of communications within the grid. You'd also have to put in a lot of energy storage capacity in order to smooth out the output from the huge quantity of renewable energy that you have. So all of that is quite a big investment up front. That would probably be of the order of $3 trillion, a little bit over $3 trillion in terms of gross investment. However, there's a lot of savings once you've got that in place. For example, the US spends a great deal of money, the utilities spend a great deal of money on coal and gas as fuel for their coal-fired and gas-fired power plants. And you're going to save all of that. And if you look at the cost of, for example, a coal-fired power plant over its lifetime, then the majority of that cost is actually the cost of the coal. Not the capital cost up front. For a solar plant, obviously the costs are all capital costs up front, and there's no fuel costs at all, and virtually no operating costs. So what you find is that you spend a lot of money up front, but then you save a huge amount in terms of fuel costs. And I've estimated you'd save about $1.25 trillion in fuel costs between now and 2050 if you were to phase out fossil fuels and replace them by renewables. You've also got some other savings which you need to take into account. Slightly more complex issue is that here in the US in particular, most coal-fired power plants are quite old. They're in their sort of 30s, in many cases in their 40s. And these things were designed to last for roughly 30 to 35 years. So most of them are going to have to be replaced anyway within the next 5 to 10 years. And it doesn't really matter whether you're going to go green and carbon free or not, these plants will still have to be replaced. And replacing them will cost another roughly $1 trillion to $1.25 trillion. So that's a cost which is going to be incurred, which is not actually associated with decarbonization. It's a cost which you'd have to incur whether you decarbonize or not. So if you net off, these two offsets, so to speak, your $3 trillion comes down to somewhat less than $1 trillion. And if you spread that over 30 years, it comes to something of the order of $10 to $15 billion a year, which is actually not a huge amount. It's significant, obviously, but it's well within the range that a country like the US can afford. I mean, just by benchmark, US is currently spending somewhere around about $40 billion a year on energy-related infrastructure investments. So it's well within the range of what we're spending today.
Does that include the costs that would be associated with, mitigating the pollution or the emissions at the moment?
No, it doesn't. So that's another big issue. A lot of the pollution in major cities in the US comes from the power plants, coal and gas-fired power plants. A lot of the sort of smog is generated by those. And the Environmental Protection Agency has put some numbers on the health costs of the smog generated by burning fossil fuels. And that comes to tens to hundreds of billions of dollars a year. A significant part of that could be offset, obviously, if we were to move away from fossil fuels in power generation. You'd still be left with some smog generated by vehicles, although some states are now increasingly pushing for electrification of vehicles, and that could offset some of that too. But the removal of fossil fuel in power generation would probably save tens of billions of dollars a year in terms of health-related costs. So I think that if you look at it from a cost-benefit analysis overall, as you were suggesting up front, I think it's a very attractive investment. The benefits greatly outweigh the costs. And that's before we even talk about climate change. If we're mitigating climate change as well, that's another huge benefit coming in there. And it's hard to put a value on that because it's such an all-encompassing phenomenon, climate change. But I think it's a hugely attractive investment, no question about that.
Do you mean it's a hugely attractive investment from the point of view of a federal government that's trying to meet climate targets and clean up the air, or that it's a hugely attractive investment from the point of view of a utility or power generator entering this space?
Good point. Certainly the former. From a social perspective, it's a very good investment. The benefits greatly outweigh the costs. Now, from the point of view of a utility, it's still actually an attractive investment. I mean, a lot of utilities are moving over to renewable energy quite independently of any government incentives in the area. At the moment, the government incentives are fairly limited. There's a small production tax credit, which is being phased out by next year, federal production tax credit. That will have gone by next year. And utilities are still investing very heavily in renewable energy. The point is that if you look at the data, and I rely heavily on the website of Lazard, the investment bank, they have a very good compilation of cost data. If you want to produce electricity in the US, in large parts of the US, the most cost-effective way of doing this today is either wind or solar. If you look at the ranking of energy sources by their costs, wind and solar are almost always at the bottom. So natural gas combined cycle power plants come a bit above that. So wind and solar average out at about 4 cents a kilowatt hour. Combined cycle gas plants sort of 5-6 cents. And then coal plants are sort of 9-10 cents. And then nuclear is somewhere up in the stratosphere, I'm afraid. So even from a utility perspective, it's actually quite attractive to move away from coal and gas towards renewable energy. And the benefits get bigger the broader the picture you take.
Right. So just to be clear, I mean, if it's going to cost $1 trillion, it needs $3 trillion worth of investment. But if the net is a $1 trillion expense, essentially, does this, to encourage it to happen, does that need a carbon price? What kind of carbon price does it need if it does? Does that need, are we basing this on existing technologies? Does it imply some kind of breakthrough on battery or drop in the costs there? I mean, how are you coming up with that kind of number? I don't want to get too much into the nitty gritty because we don't have too long, but I'm curious.
So I'm taking the current costs of wind and solar power plants, according to the Energy Information Agency here in the US. I'm taking the cost of battery storage at around about $100 a kilowatt hour. That's come down enormously from $3,000 a kilowatt hour as recently as about 15, 20 years ago. Tesla now claiming to be able to buy its batteries at around about $125 a kilowatt hour. So $100 a kilowatt hour is what Elon Musk thinks he'll be paying next year. And I'm sure those costs will fall further. I mean, I think it's reasonable to think that by the time we're at, say, 2030, you'll be paying something like $60 a kilowatt hour for battery storage. So I'm assuming a bit of a drop in the cost of battery storage, no drop at all in the cost of solar or wind, and no changes in technology. And as to the carbon tax, I think that carbon tax is one of the things we may actually see in the US under the new administration, because there is apparently some Republican support for carbon tax as well as Democratic support. That could be very important. Incentives are there for transition to renewable energy, but they would be strengthened by a carbon tax, obviously. A carbon tax of, let's say, $100 a ton of CO2 emitted would put up the price of coal-fired electricity and of gas-fired electricity, both by somewhere of the order of was that gas would go from 5 cents a kilowatt hour to 6 or 7 cents a kilowatt hour, and coal from 9 to maybe 12. So it would put up the costs there quite a bit, enough to make them even less competitive than they are today. And that also helped with the transition away from internal combustion engines to electric vehicles in transportation, which I think is that's going to be the most difficult part of the transition. I think we've got a number of electric cars available right now, but they're not selling terribly fast.
Right. Let me just a couple more questions on the power generation. Maybe we'll come to the other parts of the transition in a sec. I mean, Joe Biden's target is full decarbonisation of power generation by 2035. You've talked about 2050 as being a feasible target, and and with this huge investment, but one that could be incentivized in the right way and achievable. Does 2035 change the calculus for you?
Yes, it does. 2035 is quite ambitious. I'm not against ambitious targets, but there's two issues really with 2035. One is that just the pure logistics, really, of getting all of this all of these wind and solar plants up and running by 2035. It's not clear that the supply chain is actually big enough to handle that because this is a fairly specialist business. The second thing is that it probably will put the cost up. If you bring all of the factories up to their capacity limits, then costs tend to rise. And it also doesn't give a lot of time for costs to fall. I mean, in general, the costs of wind, solar, batteries, everything like this, they've all been falling over time, and there's every expectation that they will continue to fall. If you delay the total transition to 2050, you've got more opportunities to take advantage of those falling costs. 2035 is forcing most of this to occur essentially this decade. And so we're going to be using something pretty close approximation to the current cost structure. Now, in my estimates, I've assumed the current cost structure, but nevertheless, there is scope for further reductions, I think, if you string this out to 2050. So I think it's fine to set 2035 as a target, but I think we have to recognize that we'll push the costs up a little bit. And there's also some chance that we'll get 80% of the way there by 2035, but not 100% of the way there.
Right. And 80% would still be a long way. I suppose the 2035 target is partly explained by not wanting companies to feel on the investment side that there are still many decades left in which they could build a fossil fuel fired power station. I guess that's part of the intent. One question has just come in from Felix Tan. The economics are attractive for solar and wind versus gas. How do we factor in grid management, and are we focusing enough on this?
Yeah, grid management is important. I mean, in the calculations that I've done on the costs, I've allowed for a 30% extension of the US grid. US grid has about 200,000 miles of high voltage cables at the moment. I've allowed for a 30% increasing that. And that's important because the best place to generate wind is often not where it's actually that the power is actually needed. The best place to generate wind in the US at the moment is the Midwest, the so-called high plains, where the wind is quite strong, quite consistent. But the wind is consumed in places like New York and Washington and Boston and San Francisco and Los Angeles. So you need literally thousands of miles of high voltage lines to get the power from where it's from source to sink. So yes, I mean, that's a good point. And most of the calculations that you see on this do build in a considerable amount of investment in grid infrastructure.
If you were looking at, or if you were advising the new incoming administration on what they should prioritize, given that they probably will have to pick and choose if they're going to get support from within the Republican caucus in Congress anyway, what would be your, looking at the picture as a whole, what would be your advice to start with? Would it be transmission because of the potential job creation? Would it be the kind of solar panel, installing hundreds of thousands of solar panels everywhere? Would it be something on the EV charging station side, or what would you say should top the list?
Probably building out wind and solar power stations because those can be spread all over the country. and politically that's attractive because they're quite labor intensive in the early stages, so it's going to generate jobs, which is going to offset some of the unemployment we're going to inherit from the end of the COVID outbreak. And I think that will make it attractive to Republicans. I mean, there is Republican support for renewable energy. Republicans may be skeptical about climate change in some cases, but they do support renewable energy. And for example, one of the most remarkable phenomena in here is the growth of renewable energy in Texas, which is a conservative state and the home of the oil and gas industry. But 28% of renewable power in the US comes from Texas, which is quite remarkable. And they've built out very extensive wind and solar power there. So that, I think, would command some bipartisan support. The government doesn't actually need Republican support to, for example, strengthen fuel economy measures. And those are things that Biden can do with his own sort of executive actions through the Environmental Protection Agency. So that's a little bit less crucial in terms of managing Senate relations.
Stick with some more audience questions because they're good ones. One's just come in from Gregorio Saichin. Can $100 a ton, sticking with the same topic really of Congress, can $100 a ton of CO2, can that kind of tax be digestible for the Republicans in your view? That's a pretty hefty tax, although to put it into context, BP in its scenarios, when it looked at what carbon tax might be used, what price for carbon may be included in a rapid transition, they talked much higher, I think about $230. So $100, let's start there.
Well, $100 a ton is roughly $1 a gallon on the price of the retail price of gasoline and petrol. Is that acceptable politically? Not sure, actually. That's on the margins. I think $50 would be. I mean, here in the US, the price of petrol or gasoline has been fluctuating a great deal in the last decade. So people are used to paying anywhere from $3 to $4 or $5 a gallon. And an extra dollar probably would not be noticed too much, particularly if it was phased in over a few years. There have also been quite interesting suggestions about introducing a tax on carbon and then rebating the revenue to individuals so that people actually see the money coming in as checks. Canada has done that, and it's apparently been politically quite popular. So, it's possible that $100 a ton could be sold to Congress if it were combined with the promise that this would be sort of earmarked and rebated directly to consumers, so consumers would see it in their checks or as a credit against their tax bills or something like that. I'm not absolutely certain. I think that the question has got a good point there, and I think you're quite right in saying that if you really want to have a big impact on energy consumption, you probably need a tax which is higher than $100 a ton. $200, $300, $400 a ton, I think, are the types of numbers that we'd ultimately want to go for. But I think that would be politically impossible right at the moment.
Interesting. I've spoken to some Republicans who've channeled Milton Friedman and said, a tax on carbon could be possible because it's taxing the polluter, provided you are also freeing. You were removing taxes from the consumer, but that would be kind of mainstream accountability in a tax policy that might be acceptable to people who follow his teachings. Let me go to another one from the audience, from Dominic Levents. Do you expect an industrial strategy in the US to combat Chinese market power in technologies like EV batteries, rare earths, solar, and turbines? It does sound from, this is me, not Dominic adding this, it does sound from the language that Mr. Biden used on the campaign trail that that's exactly what he has in the back of his mind, is some kind of strategy to combat China in this clean tech race. Do you see that being formed in the shape of an industrial strategy per se?
Industrial strategy in the kind of European sense would be a hard sell, I think, in the US. I do see the Biden administration, probably with support from Republicans, taking measures to strengthen US competitiveness vis-a-vis China in a whole range of clean technologies. And I think that's a very saleable concept. I think that Trump has pursued a very aggressive policy vis-a-vis China in terms of trade policies. And that has probably been fairly popular and commands bipartisan support. So if Biden, I think, could easily continue something like that in the clean technology area. So I think you'll probably see preference being given to US production of wind turbines, US production of solar wafers, and development of battery technologies which are indigenous to the US. And there are a number of startup companies in the US which have very good ideas about battery technologies. Currently, all of the big batteries are being installed a lithium-ion, kind of the conventional technology. But there's several startup companies which have rather different and quite innovative technologies for energy storage. So there is the opportunity, I think, to build up a domestic US technology in this clean tech area. Yes, absolutely.
Do you think, just as a point of principle on this, do you think, as a business professor, that competition in that area, especially on a kind of national level or international level, do you think competition will accelerate this clean tech? That the principle of a clean tech race is something that will, help speed up the transition, or do you think it's cooperation and international cooperation that will do that?
I tend to believe in competition. I think competition will get a long way here. I think that China, the US, and Europe are three big blocks, and I think they're all investing quite heavily in clean technologies. The US has been a bit of a laggard until now. I think a lot of the running was originally made in Europe, actually. Germany and Spain were very innovative in clean tech areas. China has caught up and is probably dominating the field today. And the US is still a bit of a laggard, but I think the US will catch up. And I think all three of them will compete quite effectively in this area. And obviously, a lot of the companies straddle all three places. So, for example, Iberdrola, which is a big European company, is operating here in the US on quite a big scale. The automobile companies, which are going to be investing very heavily in battery technologies, again, the same companies sell in China and the US and in Europe. So there's an odd combination of competition and some cooperation, because the companies that straddle all three of these blocks will be moving their technologies between them quite freely. So we're going to get a mixture. But I think that it's certainly if the three sort of sets of governments compete to promote clean technologies, that will be to everybody's advantage in the long run.
A couple of final brief ones. Well, your answers will have to be brief as well, I'm afraid, because we're running out of time. But let me start with some technology side. CCS. I mean, some of the legacy fossil fuel producers like to see CCS as a solution, and they're helping them to have a role in this transition. Do you?
Nope, I don't see any role for CCS, not in the near future. CCS is something you bolt onto a coal-fired power station or a combined cycle gas station, and it raises the cost quite a lot. It can push the cost of power from a coal-fired power station from 9 cents to 12 cents. It's already uncompetitive. Why would you do something which makes it even more uncompetitive? You're better to build a wind station.
On the same theme, there is a theory that a company like ExxonMobil, for example, I've written about this myself in the FT, sees itself as having almost a privileged role in the transition, and that as others evacuate the space, other oil producers leave, big producers like ExxonMobil will be left to be the kind of producers of last resort. Does that make sense from your point of view?
No, it doesn't. Producers of last resort will be the lowest cost producers, I think, won't they? I mean, what's going to happen is you're going to get a gradual transition away from internal combustion engines towards electric vehicles. As that happens, the demand for oil is going to drop. When the demand for oil drops, the price of oil will drop very, very sharply. The price of oil is very sensitive to demand, supply imbalances. And that means that production will become concentrated in the low-cost producers. And the low-cost producers, I'm afraid, are all in the Middle East, or almost all in the Middle East. They're Saudi Arabia, United Arab Emirates, Kuwait, Iraq, actually. There's some US companies operating in Iraq, of course. But I think we'll see a concentration of the oil industry back into the Middle East. And a lot of the US operations, and the ones that Exxon owns, are really quite high cost. So I don't think they will survive the energy transition, I'm afraid.
And last question, and it has to be a couple of words only in your answer. If you had $100 billion now to invest in a clean tech to profit in this transition, which technology would it be?
Probably solar. There's some interesting solar technologies which haven't been deployed on scale yet coming down the road. A concentrating solar power, multi-junction solar power cells, greatly increase the efficiency of energy conversion. They could revolutionize solar.
Brilliant. Thanks, Jeff. That was a really fascinating discussion. Thanks for joining me. Thank you to the audience. Thank you for the questions. Do stick around. The next session is the big FT debate. Is there a role for gas in a net zero economy? That's going to be moderated by my colleague, David Shepherd, the energy editor at the Financial Times. Thank you.